Hello guys, this is Ayman Muhammad, SAP Financial Expert. Today I'm going to talk about a topic which is very important for all business educators, not only for SAP consultants. However, for SAP consultants like Material Management, SD, HCM, who has a related integration with finance, they need to know and understand the logic behind the financial impact. Today I'm going to talk about debit and credit logic. And once you see or hear about business transaction, you can understand immediately what's gonna be debit and what is gonna be credited. I'll give a small example. Let's start it. I expect that father and his son. The father is going to invest in his son. And in order to do investments, he gonna invest in his education, his son's education. And he knows that his son's education repays the highest interest. He brings his son car, home, house, and pay him some cash and send him to educate in some place. He also pay for his son's food and bring him some stock from papers and pens and so on. As you can see, all these things which facilitate his son process considered assets. Once it's increased, it's assets. And it's debit at the same time. In case of it's increased, it's debit. But the son is also a good son, and he knows that he don't own these things only. He owns the car and the home. However, he owes its value to his father. And some side knows that once his accounting is the language of business, we'll find the sources also for this. Once accounting is the language of business, he decides to represent the financial impact of this education to his father. He decides to create a ledger for his father, and ledger represents the paper to present to specific party. And once he own the car, own these debit things and owe it at the same time, this means this is called dual effect, as we consider accounting as a scale, and scale bands must be balanced all over the time. And he considered himself a separate entity. He traveled to educate and start to represent the financial impact that he owned and owe to his father. Let's say that his father pay him 10,000. This means that he owned 10,000 and owe his father 10,000 at the same time. What is gonna facilitate his investment process or his education process is the cash. In this case, cash will be debited by 10,000. And what is the source of cash? The source of cash is considered a credit. Let's say it's consider or imagine the journal entry: debit cash with 10,000 and the credit owner's equity or father's equity. Father rights with 10,000. Let's take another example that the son want to purchase something that gonna facilitate his study, his investment. Like for example, you need to buy some materials, extra materials. In this case, he's gonna debit the materials or equipments that he needs, and the credit, if he didn't pay it for the vendor immediately, for pay cash, he gonna credit what is the source of this debit, source of this equipment. It's the vendor, he buy from it. In this case, we can say that debit equipments credit the vendor. But what is the cash balance in this case? The cash balance not hit. I didn't absorb from my cash. In this case, the cash balance will be kept 10,000. But what if I'm going to pay cash? In this case, that once I am reducing from my facilities of education like cash, it's become credit. It becomes credit. What is the destination of this credit? Considered in this case, it will be considered the debit at this time. I'm going to say that credit cash and debit vendor. I wish you understand the concept of source and destination, which facilitate the debit and the credit easily. And what is the balance for my cash in this case? I receive 10,000 minus 5,000 I pay for the vendor, the remaining is 5,000 to represent to my father. But what if I need to represent totally different values for another party? In this case, I'm going to create a new ledger with different behavior. This is the concept of entity, bookkeeping, ledger, and debit and credit flavor. Thank you for watching, and please don't forget to subscribe. Thank you. Ayman Muhammad.